All right, so we're diving into some pretty interesting stuff today, specifically Nvidia.
Yeah.
Nvidia and their big GTC developer conference.
Yeah.
That's it's coming up actually this week.
Yeah, it's a big one.
We found this analysis that kind of takes a look at how their stock has performed, historically
Right.
around these events, and I thought it was pretty fascinating.
Yeah, I think the analysis you shared is really interesting. I mean, not just for what it says about, GTC itself as, a major kind of industry event, but also what it might reveal about how the stock tends to behave.
Right.
In the, weeks and months following the conference. And so our mission today as we dig into this is to really understand these dynamics, go beyond this sort of immediate hype and the historical patterns to try to offer a clearer picture.
Okay, so let's start with the basics. For anyone who maybe hasn't followed NVIDIA super closely,
Sure.
What exactly is this GTC conference all about?
So GTC stands for GPU Technology Conference. It's NVIDIA's flagship event for developers. It's an annual, sometimes biannual event. This year it's happening in San Jose, California, from March 17th to the 21st. And, it's really become the key conference, I would say, focusing on AI, artificial intelligence, and all of its, related technologies. So we're talking about everything from advancements in computer vision and autonomous robots to kind of the cutting edge of quantum computing.
Right, so it's evolved way beyond just the, graphics cards that we all used to know NVIDIA for.
Oh, yeah, absolutely. I mean, their roots are definitely in GPUs. But you're right, GTC now reflects the much broader role in this whole AI ecosystem.
Yeah.
It's a really important gathering, I think, for developers, researchers, leaders across various industries. Yeah. And a major highlight is always the keynote address by the CEO, Jensen Huang, where he typically unveils, their future product strategies, their vision for new market opportunities, and so on.
Right. So the big reveal, essentially. Which brings us to one of the more surprising observations from this analysis, because you forget the initial excitement around these announcements. What has actually happened to the stock price, like in the month after some of these past GTCs?
Well, yeah, this is where it gets, I think, particularly interesting and maybe a little bit counterintuitive. The Motley Fool analysis that we're looking at today examined the stock's performance in the 30 days following the 5 most recent GTC events. And what they found was a pretty distinct trend.
What did they find?
So let's get into the specifics. So following the GTC that ended on April 16, 2021, the stock actually decreased by 10%.
Wow.
After the March 24, 2022 event, we saw a much bigger drop, 31%. The GTC ending September 22nd, 2022, followed by a smaller decline, only 1%. Then after the March 23rd, 2023 GTC, the stock basically stayed flat. It was a 0% return. And then most recently, following the GTC that wrapped up on March 21st, 2024, the stock fell by 17%.
So in 4 out of 5 of these instances, the stock's actually gone down in the month after this supposedly, positive industry event.
Precisely. And if you average those 1-month returns after the last 5 GTCs, it comes out to about negative 12%. So it definitely suggests, at least historically, that there's a tendency for investors to sell the news following these events.
Interesting.
One potential reason for this, you could speculate, is that maybe the market anticipates a lot of these big announcements. Leading up to GTC, they sort of price in, expected positive news. And then once the event happens and the information is public, there might be a period of, profit taking. Or maybe a reassessment of like the immediate impact versus the longer term projections.
That makes sense. So the anticipation might actually kind of inflate the price a little. And then when the actual news comes out, even if it's good, it might not, exceed those already high expectations.
Exactly. And I think that's a really important point to keep in mind as we, think about this.
Yeah. So let's look at a recent example. GTC 2024.
Sure.
We know Jensen Huang made some, significant announcements there.
Oh, yeah. We did the analysis highlights, things like the unveiling of the Blackwell GPU, which has recently entered production, along with these new data center networking platforms specifically designed for AI workloads. And then additionally, he announced these new software tools that are meant to accelerate generative AI and robotics development. So clearly, substantial developments signaling NVIDIA's kind of ongoing leadership.
Yeah, these all sound like the kind of announcements that would typically excite investors.
They do, right. And yet, despite this seemingly positive stream of news and this, clear technological progress, as we just discussed, the stock still experienced a notable decline in the following month.
Right.
So I think what's fascinating here is this potential divergence between, these fundamental advancements that are showcased at GTC and the immediate way the market reacts to the stock.
Yeah, it makes you wonder what those short-term factors really are that might be at play.
Absolutely.
So looking ahead to this year's GTC 2025, is there anything that indicates that things might play out differently this time?
Right.
The article does touch on, the expectations of Wall Street analysts.
Yeah, it does. And according to the analysis at the time it was written, the median target price among Wall Street analysts for Nvidia's stock was $175 per share.
Okay.
Now, considering that the share price was around $120 at that point, that implied a pretty significant potential upside of 45%.
Yeah, that's huge.
And they even mentioned an updated price of 115.58. So, still suggesting that the perceived upside remained pretty substantial.
Yeah, that's a big difference. So why are these analysts so optimistic?
Right.
Given this history that we've just talked about of the stock dropping after GTC?
Well, the analysis points to a couple of key factors. One possibility is that Jensen Huang might use this keynote to kind of directly address some of these headwinds that the company is currently facing. This could include things like advancements from competitors like DeepSeek in more cost-efficient AI model training, or the ongoing, regulations around chip exports. So positive statements or strategies to navigate these challenges could definitely reassure the market. And potentially give the stock a boost.
If they can calm some of those fears.
Yeah, exactly. If they can counter some of those, market anxieties, I think the narrative around the stock could definitely shift.
Yeah, okay, but let's zoom out a little bit.
Sure.
Beyond just the short-term dynamics around these GTC events.
Right.
What's the fundamental long-term investment case for Nvidia?
So when you connect all this to the bigger picture, the long-term investment thesis for Nvidia looks pretty compelling. I mean, they hold a dominant position in the data center GPU market. And these GPUs have essentially become the industry standard for accelerating artificial intelligence workloads.
Now, when you say AI accelerator, could you just quickly remind people?
Sure. So these are specialized processors, often GPUs, but increasingly other types of chips as well, that are designed to perform the complex calculations required for AI tasks, much more efficiently than traditional CPUs. So that's why they're called accelerators. And the projected growth in spending on these AI accelerators is immense. I mean, Grandview Research forecasts an annual growth rate of 29% through the year 2030.
Wow. So that's a massive growth trajectory.
It is.
And the analysis highlights, this impact of generative AI, which has really captured everyone's imagination.
Yeah.
Especially since the launch of ChatGPT in late 2022.
Absolutely. I think, the rapid advancements and widespread adoption of generative AI have definitely been a major catalyst for NVIDIA's growth. But it's important to note that their ambitions go way beyond just generative AI. They're also making big investments in what they call physical AI systems, which include things like autonomous vehicles and humanoid robots.
And that's where that Nvidia Cosmos platform comes in, right?
Yeah, exactly. Nvidia Cosmos, which they unveiled earlier this year at CES, is this platform that includes pre-trained foundation models designed for these physical AI systems.
So just for our listeners, what are those?
Right. So think of these foundation models as essentially pre-trained AI systems that have learned from massive amounts of data. So it gives developers this really strong starting point that they can then fine-tune for specific robotics applications. Saves them, a lot of development time and resources. And this platform really integrates NVIDIA's hardware and software capabilities to offer this kind of comprehensive full-stack solution for the robotics industry. And, Jensen Huang himself said the ChatGPT moment for robotics is coming.
Wow.
So pretty bold statement.
It is.
Yeah.
It is. So given these long-term growth prospects, I mean, the earnings expectations for Nvidia on Wall Street must be pretty significant.
They are. The analysis indicates that Wall Street anticipates Nvidia's earnings to grow at an average annual rate of 39% through fiscal year 2027.
Wow.
Which ends in January of that year.
Okay.
So when you consider that level of projected earnings growth, the article suggests that the current valuation, which was around 40 times earnings at the time of writing, starts to look pretty attractive, maybe even downright cheap.
Right, especially when you think about some of those headwinds we talked about earlier.
Exactly.
The competition from DeepSeek, a potential slowdown in AI infrastructure, spending, all that stuff.
Absolutely. Those are all valid market concerns. I think that could partly explain why the valuation isn't even higher.
Right. The market's always trying to balance,
always weighing the risk and
that future potential with those risks.
Yeah.
So bringing it back to the here and now in this year's GTC,
right.
What's the analyst recommendation from this Motley Fool piece?
So they seem to be advocating for a somewhat measured approach. You know, they basically say don't make, purely short-term decisions based on the expected GTC hype.
Okay.
While still acknowledging that historical pattern of, stock declines following the event.
Right.
So the strategy they suggest is to kind of split the difference.
Okay.
Consider an initial smaller investment before GTC 2025 ends.
Okay.
And then potentially add more shares in the weeks that follow if the stock price remains at a reasonable level.
So trying to balance the potential for some immediate, positive news with the historical tendency for it to pull back a bit.
Yeah, I think that's a good way to put it.
So for our listener, what would you say is the most important takeaway?
Yeah, I think the key insight here is that while understanding these historical market reactions to events like GTC can be really valuable, it can give you some context.
For sure.
Ultimately, your long-term investment decisions should be driven by the, fundamental strength and future potential of the underlying business.
And of the company itself.
Yeah, exactly. And NVIDIA's position within this rapidly expanding AI landscape seems exceptionally strong.
Yeah, I think that's a fair assessment.
Yeah, and I think that's a crucial factor to consider, regardless of these short-term market fluctuations.
Yeah, just because something happens around, a conference or an event doesn't mean it reflects the
big picture.
The big picture, yeah. So to recap quickly, GTC is this major event in the AI world. It's often accompanied by these big product announcements.
Yeah.
But historically, NVIDIA's stock has tended to dip a little in the month after these events.
Right.
However, analysts still have this very bullish long-term outlook.
They do.
Primarily because of NVIDIA's, dominance in this booming AI market.
Exactly. I think that's a great summary. And I think it's important to remember that while being aware of the short-term volatility that can happen around events like GTC is prudent, your focus as an investor should really remain on those long-term trends and NVIDIA's really central and evolving role in the AI landscape.
And on that note, here's a final thought for you, our listener, to consider.
Okay.
Given this pattern that we've seen of a stock dip, after GTC, alongside what seems like a very compelling long-term growth story for NVIDIA, what does this tell us about how the market tends to focus on the immediate news versus, the more substantial long-term potential in a sector like AI?
It's a really good question, and it might encourage you to think about, your own investment time horizon and your overall strategy.
Right.
So, yeah, definitely something to ponder.
Absolutely. Thanks for joining us on this deep dive.
Yeah, thanks for having me. It was fun.
We'll see you next time.
Sounds good.
Bye.